Hi there, traders. This is Brad Gilbert with the Daily Market Insight for the 1st of June. All right, now, very frustrating waiting for this US debt ceiling to be resolved. It looks like they are moving towards a vote, so hopefully we get some resolution. But now the good news is there's life in the markets, and a few things have really come alive. And this is where you take the US dollar or the US out of the equation, because things are starting to happen in the global economies, right? Canada, UK, Europe, it's all sort of kicking in. Now, let me just sort of give you a bit of a run through what I'm talking about. If you just look at the data from the previous day, right? So just coming through and I sort of mentioned this earlier in the week, all the German CPI, right? Germany is the key to Europe. Now, a lot of the inflation numbers are coming in much lower than the previous month. All right. So there's some signs here that all is not well in Europe. But if you come back down here and look at the not only just the German states, but then look at the prelim GDP numbers, right? Much lower than the forecast, right? And what does this do for us? Well, I'll tell you what, we've been sitting here watching the US work out their shit. And what we're starting to see is Euro, well, you're starting to see life, right? These numbers are impacting the markets, and we are starting to see a bit of an impact. Now, it's not an easy trade by any stretch, and Euro had already sort of climbed through this resistance line a few days ago. So, but what I'm trying to say is you'll see here when I go through a couple of currencies, focus on these instruments that are sort of reacting to the numbers, right? These weak CPI numbers changes the picture for the ECB dramatically, right? And even with the late dollar sell-off, okay, at the end of the day, yeah, Euro picked itself up off the floor, but nothing like the move we saw on sterling and dollar CAD. And that's because these specific currencies had other data coming into play that really kicked home. Now, the Canadian GDP numbers, okay, very strong, right? Much stronger than forecast and much bigger than the range. And this sort of brings in or highlights the potential further rate hikes in Canada. And that saw dollar CAD rally aggressively. Now, the situation is, I mean, we've got, oil, which is falling again, which supports a higher dollar CAD. Now, stronger Canadian numbers pushes dollar CAD back down. So it's a bit of a mixed bag just at the moment. It is oversold. It's just gone through the trend line. It's just sitting there, but the writing is on the wall. We're starting to see instruments move. And if you look at the overall potential here, it's like 80 points, right? I'll tell you what, in the current environment where we have been waiting, that's a little bit of a reprieve. Now, you come back, if I just come across to actually, let me just give you a look at this. This is the sort of headlines you're going to be getting, right, on these various releases. So Canadian GDP figures outperforms increased odds for rate hike, right? So you got to connect the dots, right? Just because you got strong GDP doesn't mean the currency necessarily rallies all the time. It's an overall health check of the economies, and that's a sure sign that you can sort of see exactly what's going on across the board there. Now, likewise, if I come back and have a look at sterling now, sterling, they're talking about the interest rates, right? The situation over there with rates being completely out of control, okay, as in much worse than the US. Bank of England to take bank rate at 5% next quarter as inflation proves sticky. It's the biggest talking point. And Bank of England's Catherine Mann, has come out and said, at the bottom here, signs of persistence in underlying pressures, okay? Headline price rises, if I can just move the text there. This is the one here. With both large headline price rises and growing signs of persistence in underlying pressures. This is coming from the Bank of England, right? So if you're wondering why sterling has been jumping up very aggressively, well, here's your answer, right? So if I come back onto the major pages, just on the crosses there, you can start to piece together exactly what's going on, right? So sterling's going up. Now, when sterling goes up, the dollar goes down, okay? We've also got strong Canadian numbers. Now, the situation was we had weak Euro numbers, but the rallying sterling and CAD have sort of given Euro a bit of a reprieve. If anything, I'm starting to think of it could be a really nice sell here back towards resistance back at 107.20 on Euro. Right, I know we've still got the US debt situation to get through, but I'm telling you, these things are coming alive very quickly, and there are opportunities not just on the majors, which I'm showing you here, but also on some of the, obviously on some of the crosses. You look at something like Euro CAD, you're going to have some good trading opportunities. Weak Euro, strong CAD, okay, makes for a clear trade to the downside. So that's where we are with regards the data, right? So this is really good. This is great for us, right? You can probably tell in my voice that I'm actually quite excited that we are seeing movements according to what the fundamentals are doing. So now if we come back and have a look through what's coming out today, I'm just using U-Squawk here. Just let it spin the wheels. Okay, so there's we're getting another range of data, right? This is the first week of the month, right? Non-farm payrolls are on Friday, but we will see some activity across the board here. Now, I've been watching with the CPI numbers coming out, keep a close eye on the German retail sales figures. If these are massive negative numbers, you're going to see further downside pressure on euro for sure, okay? UK national house prices, well, it'd be interesting to see what they're doing, but the writing's on the wall. The Bank of England has already said inflation's out of control, so they may not sort of come into play too much. But there are a few extra things here. The Bank of England monthly decision maker panel. There's lots being released. Okay. Now, once again, following that German retail sales figures, the EU unemployment rate, and then you've also got Christine Lagarde speaking. Now, the thing about Christine Lagarde is she's not from a central bank background. So she usually tells you exactly what it is. I've got a lot more respect for her than a lot of the central bank heads, because, you know, she can, like a normal person, she sees weak data and says, okay, things are really weak here. We've got to do something, right? So anyway, besides Christine Lagarde speaking, you've got the ECB minutes, and then we start to come into the weekly US employment numbers, right? Now, there's no clear correlation between these numbers and the non-farm payrolls. But I can tell you, with the US debt ceiling hanging in the balance, traders in North America will grab onto anything they can. So if there's any sort of variance here, we may see a bit more of a flush out of dollar longs, or it may sort of bounce back. It's one of those sort of fickle environments at the moment. The US market, right, it isn't exactly an easy pickings whilst this is going on. For those commodity traders, keep an eye on the weekly crude numbers. And actually, don't forget the ISM manufacturing numbers there as well. The this one here in particular is a big number. Once again, maybe overclouded by the continuous to and fro in the US government about this debt ceiling. So that's where we are, guys. The situation is we are seeing better trading conditions, and we are seeing specific instruments move, right? Actually, we've got some numbers here coming out too. I forgot to mention the CapEx numbers out of Australia, very important inflationary numbers. But you know what? The Aussie and Kiwi are sort of muted in comparison to what's been happening on, especially on sterling. And that's probably a lot to do with the commodities. Commodities have been getting roasted, right? And they are commodity currencies. Interesting to see CAD GDP so strong, and that may sort of come back. And you know, if we see a resurgence in the commodity markets, well, then we might see some activity on the Aussie and Kiwi, okay, that you can really sort of pick off. Now, just coming back before I finish, have a look at the global markets. Okay, so the pen up there. So the dollar index still ticking away. This is your last big support level. It's a no-brainer for a break trade on the downside here. If there's any decisions about the US debt ceiling, right, and the outcome, I couldn't tell you if it's up or down at this stage, but if the market moves and it goes straight down, this is going to be a big clean out of stale long positions. I'd be adjusting the euro trend line there. Let me do that. You can almost actually leave it for the one behind. Gold, well, it's still sort of hanging in there, right, with that support line. Tested it, but it's uncertain with what's going on there. The cryptos are back down to where they were. Oil's rolling over. NASDAQ, it's on a path of its own. And you see the S&P mini there and the Dow Jones mini just sort of back in the range, right? That's what you would expect. As we get closer to the deadline, you're going to see a lot of these instruments come back into the middle of the range as there's repositioning in the market or rebalancing, right? Portfolios that are overbalanced, they'll take off a lot of the risk and they'll put it back on once the decision is made and once they know what's going on. So there are your global markets. The Currency markets, as we already sort of went through, I think there's really good potential here for euro, definitely. I'll just circle the currency. Sterling, it is in play. So anything that comes out now that is going to influence the inflation picture, very important. Dollar CAD, well, we've got the initial move here as well. Just remember, you got to factor in a bit of what happens on oil. And that's where we are. I know dollar yen's sort of rolling over a bit. I've sort of lost touch with that, but this is telling me what the dollar's doing. I like dollar yen as a dollar proxy, okay? And it's rolling over. It brings into play, I tell you what, some of the yen crosses for sure, and you might want to sort of check that out. So basically, at the end of the day, we've got plenty to play for, right? So keep an eye on the markets. Do we have a risk-on, risk-off profile? Well, there's sort of one developing here at the moment. Risk-on, you got Euro, Sterling, Aussie, Kiwi going up. Don't forget, the markets have just reset. They're only up like 3 or 4, 5 points. But we are seeing a bit of a picture here for the start of the Asian session. We're just going to see if it carries on through the European session, which is now very much alive with the recent data releases and movements in Euro and Sterling. So keep a very close eye on that as we go forward from here. All right, guys, that's all we've got. I mean, the debt ceiling, they can sort of leave that behind because we've got better things to do now than sit back and watch them talk gibberish. All right, guys, good luck. All the best. Cheerio.